Yes, welcome to class. Tonight, we'll be discussing a very important topic in performance management, a very wide one. Yes, and the topic is budgeting and budgetary control. Why I said it is wide is because question can be set in different phases as far as budgeting is concerned. So for a student who is preparing for performance management exams, you must have an open mind to receive questions from these aspects of the syllabus in any form. In the last diet, I was actually convinced that an aspect of this will come out, will be tested, which I didn't stress myself during the revision class. I just quickly treated that particular question, which I've projected that it should come. Yes, and thank God it was tested. That is the aspects of budgeting that involve cash flow analysis, budgeting, cash flow profitability. For those of us that were in class then, you remember this question, Ozibondu. I was making emphasis on it, and similar thing was tested in that last diet. In this diet, I'm still here to calm my head down, to do some analysis. But I'm looking at the issue of flexed budgets. Flexed budgets. That's it should be tested again. The issue of flexed budgets. It's been a while now. Yes. So, but notwithstanding, we'll cover every aspect of budgets that we need to cover, so that way, in what aspects, in whatever aspect the examiner is coming, you should be able to approach the question with ease. So we're going to start our discussion by looking at what budgeting is and what budgetary control is. From our knowledge in public sector accounting, from that knowledge, for those of you doing public sector, some of you have passed it, you discover that is this topic cut across public sector and performance management. And in public sector, you have issues of rolling budgets, rollover budgets, zero-based budgets, incremental budgets, and the rest. So the knowledge is also very useful here. So they are just interwoven. Now, talking about budgetary and budgetary control, what is budget? What is budget? Everybody use the word budget. If you are a worker, you use the word budget. Once you get your monthly salary, you talk about budgets. In your household, you talk about budgets. In everything you do, you talk about budgets. To the point that some people have tagged you Mr. Budgets, Mrs. Budgets, Miss Budgets. So, what is budget? Let me start on that note. What is budget? Anybody? Let me see those in my
Hello,
class.
sir. Hello,
I
sir.
can hear you. Yes, I can hear you.
A budget is a financial plan that estimates income and expenditure over a specific period.
Yes, this is nice. Yes, that is good. So a budget, right from the days of economics in secondary school, they've been talking about budget. So a budget, as you have said, is a quantitative plan. Why am I saying it's a quantitative plan? A budget is what you can measure, and that is why it is quantitative. You can measure it with figures. Yes. So a budget is a quantitative plan prepared in advance for a specific period. So it must have a time frame. In Nigeria, our national budget is usually for a year. So, and this budget will show you what your expected income.
Yeah, I pray this network is not from me alone.
I'm not hearing anything either.
I can't hear him too. I thought it's peculiar to only me.
No, I
Okay,
think,
so that means
hello. I think
Is
I
it a
got
general problem?
network failed.
okay,
So
that,
Okay, sir.
okay.
I can't even see the screen again.
it's
Yes.
because the guy is already out of call.
Okay,
Yes.
all right.
Yes.
Thank
All
you.
right, thank you very much. I'm back.
Welcome
I'm
back.
Yes. So I don't know what happened to the network. Yes. So talking about budgets, that budget is a quantitative plan prepared in advance for a specific period and showing expected income, expenditure, and resources. And this is expressed in monetary terms. So as we prepare budgets, the budget must be defined for a period of time. You don't just prepare a budget and leave it open-ended. Yes. So, and why are you defining the period? So that you can be able to measure performance of the budget over a particular period of time. So the issue of budget is, in budgets, you have your plan and you have your actual. So where your actual supersede your budget, it means you've performed well. It means you have a favorable variance. But where your actual is less than your budget, it means you have an adverse variance. So this topic, budgeting and variance analysis, they are topics that go hand in hand. So immediately, once we conclude budgeting, we look into standard costing, variance analysis. And as we even talk about budgeting, you see elements of variance in some of the questions we'll be talking about. So as you prepare your budget and you put them into action, the difference between your actual and your budget will give you variance, and the variance can either be favorable or adverse. So this budgeting, we just talk about budget. So budgeting is the process of preparing budget. The budgeting is the process of preparing what? Budget. And what are these processes? This process entails setting specific SMART objectives. Specific SMART objectives. And why am I putting the word SMART? Because it must be, the objective should be measurable. Yes. And the objective should be actionable. And the objective should have a time bound. So the act of budgeting involves setting objective, estimating what future activities, and allocating resources to achieve an organizational goal. So the aim of budget is that you have a plan. It can be a long-term plan, it can be a short-term plan within a particular year. A long
Hello.
Hello? I think network is an issue.
The network, I think, where he is, the network probably is a bit bad.
Yes.
It's a well done, sir. How's work today?
We thank God, my shaman.
Well done, sir.
How's your side too?
Oh, bless God. We're pushing things gradually.
We thank God. May God help us this time around.
Amen. Amen.
Honestly, we are coping. We are moving with him gradually.
Yeah, I think he's
Yes.
good.
It's very
Good evening,
good.
everyone.
I can say that.
Carry everybody along. Hello, good evening.
Yeah.
My sister, right?
Good
Hello.
evening, Auntie
Good
Esther.
evening.
Yes, I'm back. Sorry, let me
Okay.
Okay.
switch my
Network, right?
let me switch my network. Let me switch my network. Let me switch another network so that I won't have this break again. Let me switch to another network so I won't have this break. Yes, soon as I try to switch, let's continue. So talking about the budgeting, that is a process of preparing budget, and it involves setting objectives, estimating future activities, and allocating resources to achieve organizational goals. Now, when you set your budget, for you to achieve the stated objective, there should be a control measure. Yes, and that is why we have it as budgeting and budgetary control. This budgetary control is a system of management control. It's a system that is being put in place by management to see that the budget this budgetary control involves determining the actual performance
Oh my God.
sorry trying to sorry about that again, and as I'm trying to switch. So this budgetary control is a system of management control in which actual performance is compared with budgeted performance. And when you compare your actual performance with your budgeted performance, what you're trying to actualize is what? You're trying to identify variance. You're trying to identify variance. Now, the question I want to ask is this. Once you identify variance, if the variance is adverse, what will you do as a performance manager? If you're a manager in a factory and you discover that your workers are wasting your materials. Now, when you compare your expected usage of material to the actual usage, you discover that there is a wide gap. And this wide gap can be as a result of what? Wastage by your staffs. So what will be your next step to correct the variance? What will be your next step? Can I get a response?
I think
Hello?
by employing skilled laborer.
Okay. Employing skilled labor. Yes, that's fine. Somebody else wants to say something? Okay, motivation of staff.
And staff training.
Okay. And staff training. Very fine.
Effective use of material.
Okay, effective use of material. Yes, that is fine.
You just think correctly, just to ensure that like she said, effective use of materials to cut wastage.
Yes. So we take corrective actions by getting the skilled labor, by training the workers. Yes, because some organizations don't value training until when an untrained staff costs them billions of naira. They will now know the importance of training. So I discovered over time from experience that training and retraining is very important, because when you employ somebody that is not skilled in a particular task, the person can throw the organization into mess. So when you compare the costs of that mess with the cost of training, you discover that if you have trained a staff, it will have saved you a lot of money. Yes, from my analysis. So if you're a manager, learn to train people under you. Yes, to help your business. So some people think that once you train them, they get another job and they run away. Yes, that is why some people don't like training. Yes, so it's very important to train people on a particular task to help save a lot of costs. So corrective actions can be taken. Now, talking about budgeting and budgetary control, what are the objectives of budgeting? What are the objectives or the benefits rather of budgeting? One is that when you make a budget, when you prepare a budget, it serves as a means of an organization, of you planning for the future. Yes. Now, this year you should have your plan, your budget. Even as far as this exam is concerned, you should have your budget. Beyond the financial aspect of the exams, what is your set target as far as these exams is concerned? Looking at the resource around you. The resource I'm talking about now, not just in terms of money, but in terms of time. Yes, in terms of time. So you set your objectives, your realistic objective, your realistic plan. So this your plan ahead of the forthcoming exam is very important, because once you plan well, definitely you will achieve your targets. Yes, as expected, you achieve your targets. So the objective of budgetary or budgetary control is planning for future activities. Plan for future activities. And once you plan for these future activities, the next thing is for you to coordinate the activities. In terms of an organization, as you plan for the year 2026, it's not enough to plan. You take a further step to coordinate those activities so that for each department to achieve their departmental goals and objectives. So once you plan, you coordinate. Now, it's also not enough to coordinate. As you coordinate, you ensure that there are certain control measures put in place. For an organization, there should be control in terms of cost and expenditure. And in organization, who are the people in charge of cutting costs? Yes, I know of auditors. Once you pass certain memos to them, they can easily advise the executive chairman or the director general. Yes, let's cut the cost in this way. And that is why auditors are not, people see them as not friendly people. Yes, because they will always want to put you right on your toes. So there should be all these channels in organizations to ensure that people don't abuse privilege. So once you set your activities by planning, you coordinate, you control. You can control your cost and expenditure. And even as you do this, you must learn to motivate your staffs. Yes. In your budget, you must create room for motivation. It is when workers are motivated, they put in their best to achieve the organization objective. But when workers are grumbling, they will be demotivated. So objectives of budgeting entails planning, coordinating, controlling, and it also entails authorizing and delegating. It is when you have a plan, you know that this tax is too much for this person, for this staff. Let's delegate, let's authorize, let's have a kind of division of labor. So it helps in authorizing and delegating. And as you set all these objectives, if time will come, you evaluate performance, you measure performance, you measure performance. And how do you measure performance? You measure performance by comparing your budget with your actual. And these will result into variance analysis. So these objectives of budgets, which also cut across to be the benefits of budgets, will also aid in communication between staffs, between departments. When you have a roadmap, you know who to pass the last line of action to. But when an organization operates without a roadmap, everywhere will look like a road, and there will be confusion in the organization. So, but where there is a plan, there is a defined plan for each department. This is your tax, this is your schedule. Everything will move as expected. So budgeting is a systematic and formalized approach for performing significant pieces of the management, planning, and control of functions in an organization. So it is the process of preparing detailed short-term corporate plan into action. So, and when monetary values are attached, the plan becomes what? A budget. The plan becomes a budget. So there are various types of budgets. There are various types of budgets. We have functional budgets. Functional budgets. Functional budgets. When we talk about functional budgets, it is mostly used in organizations that have various forms of department. So this functional budget is prepared based on the budget or the tax a particular department carries out. In a manufacturing organization, you can have the sales department. What the sales department will prepare, they will prepare what? The sales budget. You can have the production department. What the production department will prepare will be what? The production budget. You can have the purchase department or the procurement department. What they will prepare will be what? The purchase budget. You can also have those in the labor, in the factory. What they will prepare will be what? The labor budget. You can have those in the admin. What they will prepare will be what? The overhead budget. You can have those in charge of cash. Yes, the accountants projecting how the organization will get inflow and how they will spend. A prepare cash budget. So functional budget is a budget that is prepared based on departmental roles. Yes, departmental objectives. Yes. So this is a type of budget. And also we have the master budget. We have master budget. We have the master budget. Now, when we talk about the master budget is what? The summary of the whole budget. Summary of the whole budget. That is a master budget. That is, this master budget entails budget of income, or it entails budgeted income statement. It also shows the statement of financial position of an organization. So, and this master budget contains the plan of every we have still disturbing. So also preparing budget, we can also look at the issue of fixed budget. We can also look at the issue of flexible budget. We can also look at the issue of what? Incremental budgeting. We can also look at the issue of zero-based budgeting, rolling budget. And also, we can talk about program budget based on activities or programs. So, talking about fixed budget. Fixed budget. Fixed budget is prepared just for one level of activity. That is, if an organization is preparing a budget at let's say 80% activity level, they are not giving room for any other degree of activity level. Let's say having 20% activity level, 60% activity level. They are just preparing a budget just for a single activity level, which is fixed based on their capacity. That is termed as a fixed budget. But when you have budget that can be adjusted to suit various activity levels, for example, 20% activity level, 80% activity level, 30% activity level, this kind of budget is termed as what? Flexible budget. Flexible budget. This budget is adjusted for different activity levels. For different activity level. That is flexible budget. And still on these types of budgeting, we have what we call flexed budget, different from flexible budget. But sometimes some literatures try to confuse the two. Flexed budget. Flexed budget is a budget that is prepared after the actual activity to see how the actual can be adjusted to suit the budgeted. We'll look at practical examples about all this I'm talking about. Yes, we'll solve questions on them. Still talking about, just still explaining verbally. Yes, we'll look at examples on each of them. So this discussion might lapse till for like 2 weeks, if I'm not mistaken. Yes. So it's very important to understand all this. And so also we have incremental budgeting. Incremental budgeting. I want some persons to talk about this. And we talk about incremental budget. What do we refer to? Some of you have passed PSAF. Refresh your head now. I know this is very much clear in PSAF. Zero-based budget is well explained in PSAF. Rolling budget is well explained in PSAF. Yes. So incremental budget. Yes. Madam Macaulay.
Good evening, sir. Sir, I think incremental budget is the budget that a certain percentage is added to the previous year's budget.
Yes, very
Assuming
good.
the budget of 2025, they just pick it up and you add maybe like 50%. Because you think the inflation rate is high, you just add 50% and you prepare it. Thank you, sir.
Yes. Yes, that is a very good one, ma. That is a very good explanation. So incremental budget is based on previous year's figures. So you can come up with a percentage to be included based on the performance of the previous year. So that is incremental budgeting. Somebody else should talk about zero-based budgeting. Zero-based budgeting. Anybody? Zero-based budgeting. Some of you are just having only PM and FM to write. You've informed ICANN that you know PSAP, and they've passed you to tell us what is zero-based budget. If they didn't pass you now, you grumble. And these people are wicked. All right.
Okay, sir. Let me try.
Yes.
Zero-based budgeting is a form of budgeting whereby all items of income and expenditure as though they never existed. So everything is just assessed and
Yes.
figures are used.
Yes. That is very correct. Yes. So zero-based budgets.
I wanted to try.
It's fine.
So zero-based budget is a situation where you have to explain all the earnings and expenses for the fiscal period.
Okay. It's fine.
Yeah.
Yeah. So zero-based budget is a budget that is based on the fact that you assume that nothing has existed before. So you start from zero each period. So if you have sales budget for 2025, you ignore all what have happened, you set a new template. Yes. So irrespective of what has happened in the previous accounting period, you set a new template, assuming nothing has existed over time. So that is zero-based budget. That is zero-based budget. And we have rolling budget. Rolling budget. So when we talk about rolling budget, what do we refer to? Rolling budget.
Let me try again, sir. So usually a
Rolling
budget
budget.
is drawn for a fiscal, usually 1 year, but the rolling budget is a budget that extends beyond 1 year, which means execution or implementation of the budget cuts across years or beyond 1 year usually.
Yes. Yes. So rolling budgets are budgets which activities are being carried forward, activities with a particular year carried forward into another year. So you roll over 2025 budget into 2023. As a matter of fact, the public sector in Nigeria have been experiencing that over time. 2023 activities is still on in most of our organizations in Nigeria. Yes, because as at 2 weeks ago, the day I didn't have a class, yes, I missed my class on Friday. Even as I was on transit, I was being called upon to come up with capital expenditures that are yet to be settled, which we have from 2023, 2024, 2025. Yes, we should prepare a template and submit. Yes, so Nigeria is in that situation whereby capital expenditures of previous years are still being run concurrently with the current.
What happened?
I think he's still experiencing the network challenge. We should just give him some time.
Okay, I thought I'm the one having issue.
No, 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 no.
Hello, sorry about that. I just have to pick the call.
Okay.
I have a patient in the hospital, and so I just need to, once I see that such calls, I just have to pick to know what is happening. Yes. So that is why in most of my calls during my classes, I have to reject them. But since this is a patient, I just have to quickly pick to know what is happening.
It's okay, so we wish them a quick recovery.
Yes, thank you.
Wish them quick recovery, sir.
Yes.
Speedy recovery and healing.
Yes.
Amen. Thank you. So, still talking about rolling budgets. Yes, that's a budget that surpassed a year is being carried forward over to another year. But over time, with experience in performance management, all these we've talked about sometimes might not really be tested. Yes, they might just ask you theoretically. The point of focus in performance management is majorly on the issue of flexible budget, flex budget, cash budget. Yes. So these other parts can be asked in theoretically, incremental budgets, right on zero-based budgets, right on rolling, but as a matter of fact, is in the Pathfinder. So tonight, we'll start with production budgets. Production budgets, that is preparation of budget for a factory. Yes, a factory. So in preparing a budget, let's say you are working in an organization, a manufacturing organization, and you want to prepare a budget. what will be your guide to prepare a budget? What will be your guide in preparing a budget? Taking a manufacturing setting as an example. Yes, what will be your guide? What will be your guide? Assume you are a producer now. Let's bring it down home. You're a producer. What would be your guide to prepare a budget?
So maybe cost of materials, cost of raw materials.
Okay. That is one. Yes. Can I get more contributions to that?
So is it in labor production budget, have you?
Yes, you are a manufacturer now and you want to prepare a budget. What will be your guide?
I will be thinking of the cost of raw material, as my colleague have said, then the cost of labor.
Okay.
Yes.
Right. That is fine. Okay. If we should look at the opportunities around, you're a producer. You need to look at what can you produce? Is there market for what you want to produce? Can we think in that light? Yes. Is there market for what I want to produce? So it is the market, it is the availability of market for what you want to produce that should determine my budget. If I have 10 persons that will be willing to buy my product, it means I should be thinking of getting the raw material that can meet up with the demand of those 10 persons. Isn't it?
Yes, sir.
Yes, this is an advanced class. You can criticize. Yes, when you are dealing with, when I'm in a class, I'm also running a program. So if I'm in a class, in a postgraduate class, the professors will tell us that we should criticize these things, that they are real in book, they are in literatures. Yes, they are fine, but in reality, they are contrary. Yes. So some of the things we read in book might just be for book, but in reality, they are different things. But what I'm saying is, for sales, for budget, for you to determine your budget in a manufacturing setting, it is the availability of market that should be the primary guide. The primary guide. So that is why I'm showing this on my screen, that the primary guide to any budget in terms of in the manufacturing setting should be what? Your sales budget. It is what you can sell that should determine your production. It is what you can sell that should determine the amount of raw material. It is what you can sell that should be a pointer to the number of laborers, workers that you should have. It is what you can sell that should determine the factory overhead that you can incur. So because it is your sales that will bring in revenue. So the revenue that you don't have, you cannot expend. So, and once you incur labor and you don't have money to pay for your laborers, for the labor you've contracted, there will be problem. Once you buy raw material and there is no corresponding return to offset the raw material, there will be problem. So it is the availability of markets that should guide us in our budget. So in sales budget is the principal budget factor. Is the principal budget factor that acts as a guide to every other budget. Yes, in my slide, I think I have a point about that, the principal budget factor. This is it. That is, the principal budget factor is a factor that limits the activity for the budget period. Normally, this is the level of sales, and therefore the sales budget is usually the first budget to be prepared. And this leads to the orders. However, it could be, for example, a limit on the availability of raw materials that limits activity. In this case, raw material will be the principal budget factor, and this will be the first budget to be prepared. So, but in a manufacturing setting, before you manufacture, you should look at the market. Do I have market for my products? So this should be the guide. So once you prepare your sales budget, it is what you can sell that will determine what? Your production budget. Now, your production budget will now lead to what? Your raw materials, your labor, your factory overhead. So when you put all these together, the cost of all these together, you get what? Your cost of goods sold. Your cost of goods sold. So your cost of goods sold can also split into what? Selling and distribution expense, general and admin expense. And from this, we can begin to move to our profit and loss, profit or loss, can move to our cash budget. Our cash budget can also move towards our budgeted statement or financial position. So there is a step-by-step procedure in preparing or in answering questions that have to do with budget, especially production budget. So you must first of all know what your sales budget is. It is your sales budget that will lead you to your production budget in that order. In that order. Let's see. I think there is an explanation I have. Okay. All right. Oh, let's look at this example to buttress what we are saying. To buttress what we are saying as regard the step-by-step procedure. The step-by-step procedure involved in treating on production budgets. In treating questions on production budgets. I think this is not clear enough for some of us that are using glasses, right? Let me forward the question to the let me forward the question to the group.
Yeah, can you zoom it?
No, don't worry. Let me send it to the group. Okay, let me zoom. I'm zooming already. So I don't know if you can still see it. Let me forward to the group. If you can see it, you can kindly help us read. For those that can see it, as I try to forward it to the group. Don't tell me everybody is using glasses in this class. Let me look for, is Topper not in this class? Topper should not be using glasses. Let me see.
The XYZ company.
Okay.
Produces,
Very good.
the XYZ company produces 3 products, X, Y, and Z. For the coming accounting period, budgets are to be prepared using the following information. Budgeted sales, product X, 2,000 units at $100 each. Product Y, 4,000 units at $1.30 each, or $130 each rather. Product Z, 3,000 units at $150 each. Standard usage of raw material, wood and varnish. Product X, 5, varnish 2. Product Y, 3 and 2. Product Z, 2, and 1. Standard cost of raw material, $8 and $4. Inventory of finished goods. Opening inventory, 500 units for X, 800 units for Y, and 700 units for Z. Closing inventory, 600 units for X, 1,000 units for Y, and 800 units for Z. Inventories of raw materials. Opening inventory, 21,000 for wood and 10,000 for varnish. Closing inventory, 18,000 for wood and 9,000 for varnish. Labor, standard hour per unit, 4 for X, 6 for Y, and 8 for Z. Labor is paid at the end at the rate of $8 per hour. Prepare the following budgets. A. Sales budget, quantity and value. B. Production budget in units. C. Material usage budget in quantities. D. Material purchases budget, quantities and value. Then lastly, labor budget, hour and value.
All right. Thank you very much. To solve question on budget, you need to take your time and look at it over and over again. Now that's in this question, we have how many products? We have how many products?
3 products.
products.
XYZ.
Three products. Fine. Now, the first aspect of the question puts it clear. Budgeted sales. Budgeted sales. Now, in these budgeted sales, you have the units and you have what? The costs. The sales price for one, for each. You can see $100 each. For X, for Y, $130 each. For Z, $150 each. So some question will say per unit. Now it's saying that each. So the question moved further and it said standard usage of raw material. Usage of raw material. Now, we have 2 forms of raw material. What are they?
Wood and advance. I can't see it. Varnish.
Varnish.
Wood and varnish. Wood and varnish. Now, wood is measured in what?
In kilogram.
Yes, kg per unit. Yes, and varnish is measured in what?
Liters.
Liters per
Per
unit.
unit. Liters per unit. Now, for wood, or for product X, you need how many wood to produce product X? 1 unit of
5
product
kilos.
X.
5
5
kilograms.
kg.
5 kg.
Yes. And for product X, you don't only need wood, you also need varnish. How many liters of varnish do you need to produce product X?
2 liters.
2 meters.
2 liters. Yes. For product Y, same thing. You need 3 kg of wood. You need 2 liters of varnish. For product Z, you need 2 kg of wood and 1 liter of varnish. Now, for you to get this wood, the standard cost of wood is what?
8
naira.
$8.
$8. And for varnish, the standard cost of varnish is what?
$4.
$4.
$4.
Very good. Let's move further. Now, see the next line. Inventories of finished goods. Inventory of what? Of finished goods. Inventory of finished goods. These inventories of finished goods you have opening and closing. Let me ask those doing in some of our schools in financial accounting theory, they will always ask, there are three types of inventory. What are the three types of inventory? Let me ask.
Inventory of finished goods,
Finished
raw
goods, raw
material,
materials,
and
and work in progress.
progress.
Very good. Inventory of finished goods, raw material,
Material.
and work in progress. So those are the three classification of inventory. So now we have inventory of finished goods. Take note. In this classification, you have the opening value and what? The closing value of inventories of finished goods for products X, Y, and Z. Still also, you have another type of inventory. Inventory of what? Raw materials. Still under this classification, you have opening and what? Closing. Fine. I want to ask a question before we start solving, because I don't want anybody to get confused. So let me ask the question before then. As a manufacturer, do you produce what you have?
No, sir.
Do you produce?
No.
You don't produce
No,
what
no,
you
no.
have.
No, sir.
Yes, fine. I'm asking this question because over time, when teaching these aspects, students will get confused. That's why are we doing this? Let me go further. Now, now, before we move further, let's take for example. Let's take for example, for product X, I want to produce 2,000 units in this January. In this is February now. In February, 2,000 units in February. But I have some closing stock from January being brought forward to what? February. I have closing stock of like 800 units. These 800 units being brought forward from January to February will serve as my what in February? The closing stock.
Opening
Yes.
inventory.
Very good. So my closing stock in January will serve as my what? My opening stock in February. In February. Let's take note of that. So now, in my plan for February, I plan to produce 2,000 units. Now, since I'm bringing forth 800 units from January to February, how many units will I produce?
1,200.
Fine. 1,200. Because I have existing what? 800 units. Existing 800 units. Please take note of these aspects, because when we start solving, some people are used to this trading account. Purchases, add opening inventory, less closing inventory. In this case, for you to determine your production in units, it will be what? Sales budget for that particular period. Less what? Less opening. Add closing. Why are we adding closing? Because maybe in your organization, you've set a ceiling, you've set a range, a buffer that you should always have certain quantity of stock in the warehouse. So, and that will serve the basis of your closing stock. So instead of just closing the period empty, you need to set a target for closing inventory level. So for you to determine your production budget, it will be what you plan to produce in that particular period, less what you are bringing forth, plus your target closing inventory. So Your production budget will be what? Sales less opening inventory plus what? Closing inventory. Please, is this clear? Is this clear?
No, sir.
Sir, please, can you go over it again? Sorry.
Yes, we'll solve it. It's part of what we'll do here, but let me say it again. Now, Mr. Charles, you have a factory. In this month of February, you plan to produce 2,000 units, sir. That is your budget for this month of February, 2,000 units. 2,000 units of a product. Now, as at January 2026, you have a closing stock of 800 units of that particular product. Now, your expected production, your budgeted production is 2,000. 2,000. But the fact that you have closing stock from the previous month, that will not make you to produce the whole of 2,000 units again, because you have existing stock in place, which is 800.
Right.
800. So now, if you have 800 units existing and your plan for this month is what? 2,000. How many units will you now produce? Will you still produce 2,000? You won't produce 2,000, because what you are bringing forth will reduce what you are expected to produce this month. So that is why in determining your production budget, it will be your sales less what? Opening inventory.
Okay.
Because your closing for January, bringing it forth to February, will be opening.
Yes, sir.
Yes. So your closing for February will be opening for what? For March.
March.
So your production budget will be your expected sales for that particular period, less opening, plus your target closing for that particular period.
Okay, I get it now, sir. Thank you very much.
That will give you your production budget.
Thank you very much, sir. I get it.
Yes, and this terminology cut across issues of inventories of raw materials and the rest of them. So I'm saying this because over time I discover sometimes we usually get confused because we are so used to issues of trading and profit and loss account. We are so used to add opening inventory. But in this case, we are not adding. So that is why I'm taking my time to explain why it is so. Yes. So because sometimes when you say, let's opening inventory, somebody will say, how? Why? So this is not trading and profit and loss account. This is production issue. Yes, it's a case of production. Yes. So now, labor. Looking at labor, the standard hours per unit for labor, for X we have 4. This is not money now, this is hours. The hours you use to produce 1 unit of product X is what? 4 hours. For product Y is what? 6 hours. And for product Z is what? 8 hours. So now, labor is paid at the rate of what? $3 per hour. At the rate of $3 per hour. So
$3.
Yes, per hour. So looking at this question, we are asked to prepare the following budget. Prepare the following budget. Number 1, sales budget. In brackets, quantity and sales. Not just sales budgets. They've given you, they've defined the type of sales budget, what they are looking for. In quantity and value. The value is the monetary aspect. The quantity is the unit. Now, looking at this question, before we show it in our workings, what will be our sales budget in quantity for product X, for product Y, for product Z? what will be our sales budget? In quantity for product X, it will be what?
2,000.
2,000.
2,000 units.
This is given free of charge. For product Y, your okay, fine. 4,000 for product Z is what? 3,000 in quantity. Now, in value, what will be the
200,000.
sales budget
200,000.
for product X?
200,000.
That's 2,000 units times $100.
To be 2,000 units multiplied by what? $100. 2,000 units multiplied by $100. And for product Y, it will be 4,000 units multiplied by what? 130.
20,000.
And for product Z, it will be 3,000 multiplied by 150.
42,000.
50,000.
Fine. So in total, your sales budget will now be what?
1,170,000.
So that is the first step. That is the first step. Sales budgets. Please follow, because I have an assignment. When I give the assignment, you see people squeezing their face. And the assignment is so simple that once you understand this, you will not have any issue with that assignment. So we have sales budget. Sales budget. Sales budget.
I can't see your screen. No.
Sales
Screen,
budget
you.
in quantity. Can anybody see my screen?
Yes, you can see.
Yes, I can see.
You can see.
We can see your screen.
Sales budget. Sales budget in quantity. For product X, products. For product X, for product Y, for product what? Z. Sales budget in quantity for product X is what? It's 2,000. 2,000 units. For product Y is what? 4,000 units. And for product Z is what? It's 3,000 units. 3,000 units. 3,000 units. Now, in value, it will be what? Sales budgets in value. It will be what? For product X, it will be 2,000 multiplied by what? 100. And this will give us what? 200,000. For products Y, it will be 4,000 multiplied by what? 130. And this will give us what? 520. And for this, it will be what? 3,000 multiplied by what? 150. And this will give us what? 450. In total, this will be what? It will be 1,170,000.
Hello, sir.
Yes, ma'am.
I'm seeing the sales budget screen, but all these things you are saying, I'm not hearing. It just appears down.
Okay.
Thank you, sir.
All right, ma'am. So that is the first thing the question wants us to prepare the following budget That is sales budget in quantity and in value. Now, your sales budget will lead you to what? Your production budget. It is
Production
what
budget.
you can sell that will determine what you can sell will determine what you can produce. So the question next is what? That we should prepare production budget in units. Production budget in what? In units. So it means we need to refer to our sales budget in units, in quantity. So production budgets. Production budgets in units. Production budget in units. How will this look like? Our sales budget will be the basis. We have product X, product Y, product Z. Now, our sales budget for product X in unit is what? It's 2,000.
2,000.
For product Y is what? It's 4,000.
4,000.
And for product Z is what? 3,000. It's 3,000. Now, let me ask, what do you sell? Finished goods. You sell what? Finished goods. Finished goods. Now, for you to determine your production budget, can you see this? Inventories of finished goods. Inventory of finished goods. For product X, you have an opening inventory value of what? 500 units. And closing inventory value of what? 600 units. So for you to determine the quantity of product X to produce, what are we going to do? I need an explanation.
We have to less the opening
Add your
stock.
closing stock. And then you less your opening stock.
Okay. We less what?
It's opening stock, but we will less.
Less
And
opening
add
stock.
Inventory.
closing
You
stock.
add your closing stock.
Add closing stock.
Yes. And the opening inventory is what? It's 500.
500.
Then you add what?
Your closing stock.
600.
Add your closing stock. Add your closing stock. So this is 600. So your production budget in units will now be what?
2,000. 2,100.
2,100.
2,100. Fine. Now, for Y, the opening is what? 800.
800
The
units.
closing is what? 1,000. So opening, when you less 800, you add what?
42.
You add 1,000. So you have it as what? Your production for the period will be 4,200.
4,200.
4,200.
And for Z, you have what?
Same
Opening
amount.
700, closing 800. So you have it as what? This is 700. This is what? 800.
4,100.
And this will give you, should be 3,100.
3,100. At
3,100.
3,100.
3,100.
With 3,100. Now, your production budget Your production budget will lead to what? What you've planned to produce will lead to the quantity of raw materials that you need to get, will lead to the number of workers you need to get, will lead to any other thing that will be traceable to the production process. So now, going back to the question, we are to prepare material usage budget in quantities. Now, the quantity of material you will need to budget for will be based on what?
On what you want to produce.
On the production.
Fine.
On the production budget.
Yes, on the production units. So production units. So going back to this, to the question, what you want, the material you want to get, material usage budget is what? Is your raw material, isn't it? So we have inventories of raw materials. We have inventories of raw material. But the question is this: for wood, how many kg of wood do we need? How many kg of food do we need? We must ask ourselves that question. How many kg of food is required?
58.
5 kg for product X.
For product X is 5 kg.
5 kg for product X.
It's 5 kg for
Okay,
product
just hold it. Yes, just hold it there. 5 kg for product X, fine. So the quantity of product X you have to produce is what?
21,000.
2,000.
2,000.
2,100.
Fine. So if you need 5 kg to produce 1 unit of product X, how many kg do you need to produce 2,100?
10,500 kg.
10,500 kg.
Fine, 10,500, because 5 for 1 multiplied by 2,100 units will give you 10,500. Will give you 10,500. Now, for Y, you need how many kg? For 1 product Y, 3 kg.
3 kg.
For in terms of wood, 3 kg. So 3 times the total number of units you have to produce.
12,600.
Will give us
2,600 kg.
12,600. Fine. For Z, it will be 2 multiplied by what?
Multiplied by 3,100.
3,100.
3,100. And this will give us what?
6,200 kg.
So the total quantity of wood required will be what? The addition of those results.
29,300.
Let's show you.
29,300 kg.
Usage. Material usage budgets. Material usage budgets. So we have it. Material usage budgets. So we have 2 forms of raw material: wood. We have varnish. Now, we use this raw material for the 3 products X, Y, and what? And Z. For X, we plan to produce 2,100 units. And it is very clear from the question that you need just 5 kg of wood to produce 1 unit of X. So 5 kg multiplied by what? By 2,100 units you plan to produce. How many kg of wood will you use? 10,500 kg.
Sorry,
For
sir, I
Y,
can't see this.
oh, can you see it now, sir?
Not yet, sir.
I can see it.
Okay, let me reshare.
Okay.
Let me reshare my screen.
Thank you, sir. You can see it now.
Okay. So for products Y, our plan budgeted production is what? 4,200. And you need 3 kg of food to produce 1 unit of product Y. So the result will be what? 4,200 multiplied by what? How many kg? 3 kg. And these will lead to what? How many kg? 12,600 kg. 12,600 kg. For products Z, you plan to produce how many units? 3,100 is your production budget. Now, you need how many kg of wood? 2 kg of wood to produce 1 unit of product Z. So 3,100 multiplied by what? By 2 kg. You need how many kg here? 6,200. In total, for wood, how many kg do you need? You add up everything.
29,300.
29,300 kg. For varnish, this is for wood. For varnish, we plan to produce 2,100 product X, and for us to produce 1 unit of product X, we need how many liters of varnish? 2 liters of varnish. So we have it 2,1 multiplied by what? 2 liters. And this will give us what? 4,200 liters. 4,200 liters. For product Y, we plan to produce 4,200 units. How many liters do we need?
2 liters.
Still 2 liters. So we have it as what? 2 liters multiplied by 4,2,
8,400.
84 liters. For product Z, we plan to produce 3,100 units, and we need how many liters to produce one?
Liter.
So multiply by 1 liter, and this will give us what? 3,100 liters. The total liters required will be what?
15,700 liters.
14,700.
14. Should be 14, right?
It's 15, sir. 8 plus 7.
12.
8 plus 4,
15,700.
12. 12 plus 3, 15.
15,700.
15,700, sir. 4 plus 8 plus 3, that's 15,000. 2 plus 4 plus 1.
Okay. 15,700, right?
15,700, yes.
Okay, 15,700. So let's go to the question. Let's see. Now we have, let me see.
So I'm sorry to
Yes.
disagree, sir. The screen is still disturbing me, sir. Sorry, I'm so sorry.
Okay. Any other person experiencing such issues?
I can see it. I can see your screen clearly.
Okay. All right. All right. Let me still share. Let's see. So that sometimes it's not good you be in a class and you're not seeing the screen.
Colors. If you are a hairdresser or a salon interested in collaborating with me, these DMs are open. Now let's talk prices. The price of this wig costs 1,650,000 naira.
Can you see it now, sir?
I can. Okay, I can see now.
It's on now.
Yes, I can see it now.
Okay.
The question just display.
So now, I'm trying to drive at something that material usage budget in quantities. I think we've determined that, right? In quantity. We've determined the material usage budget in quantity. Isn't
Hello,
it?
sir. Please.
Yes.
Please, I was out. I didn't see how you did it though.
No, you followed up to this point. I was hearing your voice.
Okay, the wood.
We are
Okay,
still-
when we did the wood. Yes, continue, sir.
we are in vanish. So we've concluded
Okay, thank you, sir.
that material usage budget in quantity, isn't it? In quantity, we've determined that. The question wants us to also determine material purchase budget. Now, what will determine your purchase budget? Let me ask, what will determine your material purchase budget? It is what you want to use. That will
Your
determine what you will
The
get.
raw material.
Yes, it is what you plan to use. For those of you that are into baking, when you put down your list of the sugar, of the butter, of all those things you want to go and buy, except you are planning that you get another customer tomorrow, you now buy excess. But based on the current demand you have, it is that budget you plan for. Yes, so that you have your own profit. Or you will use your profit to go and buy materials that you don't know if you get customer in the next 2 days. So it is what you've planned for. The usage, the quantity you plan to use, that will determine what you will go to the market to purchase. So now, based on our usage budget, what will be our material purchase budget in terms of quantity?
29,300 for wood.
Okay.
Why varnish should be 16,700?
Okay, fine.
How
Yes.
did you get
So
it?
in terms of is what we've solved. That same result we have, this same result we have. I'm going to show it. This same result is your purchase budget in quantity. It will be your purchase budget in quantity. So what will now be your purchase budget in value? Let's show it. Material purchase budget in quantity and value. Material purchase budget in quantity and value.
Is the question I'm still seeing, sir?
We are no longer at that point. So can you see something else now?
No,
We
sir, your
can't see
screen is
the
not
slide.
seeing.
It's your face we are seeing.
This is serious.
I can see your screen.
Thank you, sir.
So material purchase budgets will be in this form. We have two forms of material, wood and varnish. Wood and varnish. In quantity, it will be what? The usage, which is for wood is what? 29,300 kg, and for varnish is what? 15,700 liters. So this is based on usage, isn't it?
Yes.
Now go back to the question. Do you have any story about
Cost.
opening of raw material, closing of raw material? See,
Yes.
We do.
inventory of raw materials.
Inventory of raw
Yes,
materials.
we do.
So will you go to the market to have what to purchase what you have in stock already?
No.
No.
Yes, sir.
So the first application will come in again.
Let's
So
open
you less what you have, you add
raw materials.
your target closing. So for you to go to the market to purchase, you must take inventory of what you have in stock. You must do stock taking. So based on what you need to use, you need 29,300 for kg of food, raw materials. What will you do? The quantity you have is 21,000 kg. You less it, 21,000 kg. And what will you do to the closing?
Add.
You add closing inventory. Add closing inventory. And the closing inventory is what? 18,000. It is based on this that will determine what you buy in the market. So when you do this analysis here, your result will be what?
26,300.
So you need 26,300 kg. This is what you plan to purchase. Your purchase budget. Coming to varnish, your opening inventory is what?
10,000.
It's 10,000 kg. And your closing is what?
9,000.
Is in liters.
9,000.
9,000, not kg. Is liters. Not kg.
Yes,
9,000
liters.
liters.
Liter.
14,700
liters.
liters. I don't see your screen again.
So this is
Please, I don't see your screen.
this is based on what? On units, on quantity. Now, in terms of value, what will happen?
We multiply the
I'm resharing my screen now.
units, multiply by the cost.
Okay, do we have the costs?
Yes.
Yes.
$8 for
$8 and $4.
Yes, standard cost of raw material, $8 for wood, $4
$4.
for varnish.
Yeah, and $4 for furnish.
So now, so based on value now, it will be what?
23,000
26,300 kg
multiplied by
multiplied,
$8.
and this will be multiplied by what? By 4.
$4.
So the result here will be what?
210,400.
I'm not seeing the screen. No.
400.
I'll reshare my screen now.
The screen is showing.
And this will be 58,800.
14,500. 58,800.
So people are in this class, they are just following and looking. Let them just finish. Or go and watch the video.
I don't see your screen again.
But if you have a
I see
question, you
yes.
can ask, please. Maybe even though I've gone far. Yes, if you have a question, even though I've gone far and maybe it's at the beginning, you can still ask. I will respond. I'll give you audience. Yes. So, so because I on this call, so hello. All right. So I can see 27 persons on this call. I don't want to assume everybody is so in case you have a question, just ask me. I'll go back.
Please, I came.
So it means that that means I'll get my.
So are you hearing?
So if there is no question,
Sir?
Assignment this night from everybody.
Sir, can you hear me?
All right, fine.
Can
So
you hear
let's
me,
take
sir?
it further.
Huh? Wow.
I can hear you now, ma.
I
can
joined
hear
the
you now.
people. I joined the people a bit late, so I don't know the topic you're dealing with.
Okay, that is nice.
I'm following quite well,
We
but I
are
don't really know the
discussing
topic that you're handling.
Budgeting and budget. There are various arms to budgeting and budgetary control. For this particular class, we are looking at production budget.
Okay.
So
Okay.
that is what we are actually discussing tonight. Production
Okay.
budget.
Okay,
But
sir.
since you joined late, you watch the video.
Thank you, sir.
So for those of you that joined early, in case something is doing you like a magic, you can speak out too. But if it is not doing like magic, let's proceed. So the next we have to look at is what? Labor budget. Labor budget in hours and what? And value. Labor budget in hours and value.
Your screen is not showing, sir.
I guess you log out and come
Looking
back.
at
The screen is showing.
yeah, so to
Esther,
produce,
don't worry, me and
looking
you, we are
at our
using
labor
screen.
budget, looking at production, looking at some production budgets, is labor budget rather. We are asked to determine the labor budget in hours and value. And from the question, for labor, standard hours per unit. To produce 1 unit of X, you need how many hours?
4 hours.
You need 4 hours. To produce 1 unit of Y, you need how many hours?
6
6
hours.
hours.
1 unit of Y, 6 hours, and 1 unit of
6 4 hours.
8 hours. 8
8
hours.
hours.
how many units have you planned to produce? Produce
2,100 units.
2,100.
To this network. God help us. Iskia.
Sir, please, I'm not seeing your screen.
Me too.
Even me,
Even
I'm
me,
not
I can't
hearing his
see.
voice.
It's a general problem.
I don't hear
I
his
can't,
voice
I
Are you
and
can't
guys
hear
Given
him.
up on the
serious?
screen.
I have given
I
up on
can
the
see his
screen.
screen. No,
I don't see his screen.
I can't
I
see it.
don't
I'm
I
hear.
not
can see the
seeing it.
screen.
I don't hear. I don't see.
Hello,
I guess you guys.
hello. Please, if you can't see his screen, can you just log out and log in? We're not much, so you're logging in. You will still be able to connect, rather than this shouting that we're just
Exactly.
shouting. One is I can't see, I can't see, I can't see. It's distracting the background for some of us, please. So immediately you don't see his screen, please just log out. I've logged out and logged in several times. I don't need to shout that I can't see his screen, please. Let's be matured, please.
Madam, we are not shouting. We are just trying to complain. But what you said is still correct. But we are not shouting here. Thank you.
Oh,
I get you, sir, but the background, it gives a shouting noise, because when you're talking,
It's
another
okay.
person's
It's okay.
network is
Sorry,
coming.
ma'am. Sorry.
It's
Sorry.
okay.
hello, sorry. I don't know what the network is doing tonight. Yes. Let's do a round up. Network is something else tonight, even with the switch to other networks. So can you hear me, please?
Yes,
Yes,
I
sir.
can hear you.
All right. Sorry about the breaking networks and other thing. So this is Nigeria. Sometimes you can't avoid that.
Sir,
So,
please, I have a question, sir.
so ask the question. Ask her.
Thank you, sir. Okay, so now I'm just trying to think through that the material usage and so on. So I wanted to be sure of what I've conceived, the
All right.
idea I've conceived about it. So now, from what you have done now, for the production and sales, we did the calculations based on each product X, Y, Z. But for
Yes.
this for the material usage, we calculated it based on the type of material and not per product. So the totals we got are for the type of material and not total of the material that we used per product.
That is for usage budget, sir.
Yes, sir.
Now, for that usage budget, we still work based on the units. You know, it is the unit you have to produce that will determine the quantity of material that you will use, sir.
Okay.
Yes, the unit you want to produce will determine the quantity of material that you will
Yes.
use and purchase. Now, for product X, the quantity you want to produce is what?
For product X, we want to produce 2,000 units.
2,100 units, sir.
Oh, sorry. Okay.
Yes. So in the question now, the usage of raw material for you to produce product X, how many units of wood will you use?
Okay. For product X, 5.
So 5 times the total unit you want to produce.
Okay.
We give you the wood usage to produce product X.
Okay. Okay.
Then for product Y too, same, you need 3 kg. You want to produce how many units for product Y? 42.
Yeah.
Can you see that in your notes, sir?
Yes.
42. So 3 kg of wood multiplied by the unit you want to produce. We give you the kg of wood
Okay.
that you need to produce product X. So can you go further? I don't know if that is addressing the question.
Yes. Okay. So I'm noting it. So at the end of the day, we then total the total unit of wood to be used for
Wood.
product X, Y,
Yeah.
and Z, and we then got the total.
Yes, sir.
So also, so we did the same thing for the varnish. Okay.
Yes, sir.
Thank you.
Yes, sir. So you know why we've done that, sir? You know, for the inventory of raw material, they didn't split it based on the product.
Okay.
They didn't split based on X, Y, Z. They gave us total of wood, total of varnish in terms of opening and closing.
Okay. That's really that throws light on my inquiry. Thank you, sir.
Yes, sir. So, but in a question where they've given you the opening specifically for X, opening for Y, opening for Z, you know, the approach will now be different now, sir. So we will not need to total all those things again. We just, yes. So depending on the dynamics of the question.
Okay, and then in that case, I also think that the the format of presentation will also be different.
Very well, sir.
Okay, okay, sir. Thank you.
So when in the exam hall, you must, one thing we students must have is to be very confident. Yes, when you are in the exam hall, yes, the questions might come in diverse ways, but you tell yourself, no, I will do my best. Yes, I know there will be always be that element of fear to a little percentage, but try to ensure that the it's not that students don't know it. Yes. So because your boldness will enhance your composure. Yes, will enhance your composure. Because sometimes you students canceling because they are doubting themselves. Am I right? So thanks for that question. So the last one is labor budget. Labor budgets. So we have standard hours per unit. Standard hours per unit. It means for you to produce 1 unit for product X, you need 4. For product Y, you need 6. For product Z, you need 8. Now, the total hours required to produce product X will be what? Because the question states labor budget in hours and what? Value. The total hours required to produce product X will be what?
8,400.
8,400, fine. Because this is 4 multiplied by the unit you have to produce, which is 2184. The total hours you have to produce product Y will be what?
25,200.
25,200.
Fine. That is 42 multiplied by 6. The total hours you have to produce product Z will be what?
24,800.
24,800.
That is 31 multiplied by 8. So the total hours required to produce these 3 products will now be what?
58,400.
58,400.
So this 58,400 hours, if you want to convert it to monetary value, what will be the labor rate?
$3.
Times the $3 per hour.
So $3 per hour multiplied by 58,400 hours will give you the labor rate. And that answers the question. So let's show it.
Please, I don't see that working though.
You said?
I don't see that working.
That is what we want to show now, man.
Thank you.
So labor X, product Y, product Z. Now, for us, the number of units we have to produce product X is what? 21. Product Y is what? 4,200. And product Z is what? 3,100. The hours to produce 1 unit of each of these products is what? Is 4 for X. For Y is what?
6.
6. And for Z is what? Is
8.
Is 8. So the total hours will give you what here? This will be 8,400. And this will be what? Will be 25,200. And this will be what? 24,800. So the total hours will be what here? Total hours will be what? 58,
Okay.
400 hours. Now, the next will be what? The labor rate will now be what? Total labor rate. You know, you can do this individually. 84 times 3, 25, 200 times 3. Yes, in that order too. You know, when we're in the exam hall, your presentation will not be same with my. That's the concept. Will always be the same result. So total is 58, 400 multiplied by what? Multiplied by what?
By 3. Hello? By 3, yeah.
By
Abi?
3. By yeah, by 3. Labor is paid at the rate of $3 per hour.
$3.
$3 per hour. So we now have it as 58, 400.
175,200.
175, 200. So we have it as 58, 400 multiplied by 3. So 175, 200.
I'm confused here.
175. The total labor hours we are to use is how many hours? 58,400 hours. And this is in
So
terms
where
of
are we
hours.
getting the 3 from?
That is why I went back to the question to show us where the 3 is from. Maybe network. See it. Labor is paid at the rate of $3 per hour. If you have total hours to be 58,400 hours, how much will you pay on 58,400 hours? This is it. Labor is paid at the rate of $3 per hour. So this is what the question wants you to do for each of those aspects. For each of those aspects. So the assignment is this. This is the assignment. This is the assignment. Let's analyze it together because I don't want any story. Everybody should be able to solve it. A sales budget for the first 5 months of 215 is given for a particular production line manufactured by Kechuku. I'll send it to the platform. But I want to analyze it first.
Please send it now, so that we follow it. Send it now. Let's follow as we're analyzing it. Yes, please, sir.
Your blood is hot to be coming down, madam.
Yeah, she send
I
it
wish
now.
they can copy this question and paste.
Don't worry. I'll send it. I don't have it on my phone. I will waste time. I don't want the network to pull me out again. Let me see if I can snap it and send to you. So a sales budget. Ma.
Is it possible for ICANN to copy this first question and paste? And then
Very well. Now. There is nothing that is not possible. Okay. But my concern is not about them pasting it. My concern is about we understanding the concept. So that, yes, the concept on everything we are doing is what you need. So that when the thing is twisted, you know how to go about it. Yes. That understanding is what I want you to have. So that anywhere they are going to, you have the idea of what to do. So the point is you can go back and resolve the question again. Yes, as you resolve again, you get more understanding, even better than what we've discussed in class. And you'll be able to teach me tomorrow likewise. So I will send this slide so that you get the question mark. So, but you can screenshot in case you want to follow. The question reads us that, because if I should give a screenshot now, it should not be that clear. A sales budget for the first 5 months of 2015 is given for a particular production line manufactured by Kechuku Limited. Months, you have January, February, March, April, May. The sales budget is given in units. The inventory of finished product at the end of each month is to be equal to 25% of the sales estimate for the next month. Grammar have started. On January 1st, there were 3,700 units of product on hand. There was no work in progress at the end of any month. Each unit of products requires 2 types of material in the following quantities. Material X, 4 units, material Y, 5 units. Material equal to 1/2. 1/2, another interpretation, English. Somebody will say 1/2 is one whole number, 1/2. Somebody will say 1/2 is 0.5. You have to go and know what is 1/2. Material equal to 1/2 of the next month's requirements are to be on hand at the end of each month. This requirement was met on January 1st, 2015. Required, prepare a budget showing the quantities of each type of material to be purchased each month for the first quarter of 2015. Another interpretation is, how many months make a quarter? You hear some students telling me 4 months. Some will say 3 months. So you need to know what is a quarter. You know, some people believe a quarter is
3 months. It's 3 months.
So a quarter is 3 months.
A quarter is 1/4.
Yes, 1/4. Fine.
That's 1.5.
Yes, you want to say something, ma?
Yes, that's 1.5. Is it 1/2, 0.5, or 1/2?
It's not, I want you to tell me now. What is your own interpretation?
Please, what's the question?
The question is material equal to 1.5. I'm now asking, is it 1/2, that is 0.5, or 1/2?
It's 1/2, ma.
Thank you, sir.
So the point of focus is the inventory. The inventory of finished products at the end of each month is to be equal to 25% of the sales estimate for the next month. It means my closing stock for January will be what? My closing stock for January.
Opening stock for February. Opening
Yes,
stock
how am I going to get?
Hello, my hello. Can you hear me, sir? Hello.
I can hear you. I'm trying to move Madam Costly. Can you be respectful?
It's 3,007. Closing stock for January is 3,007, sir.
37.
What is 37?
Okay, that is
25% of
20% of. Oh,
14.
sorry. It's 25% of
Sir, is
16.
it 20% or 25%? I can't see it very well.
So it is 4,200. 4,200. That is the 25% of February's sales targets. So that is 4,200. So that will be the closing stock. That will be the closing stock of January.
I don't understand it.
The man is gone. Network is gone.
I don't understand this second question at all. And I can't see it. Ma, please take over the class.
Sorry, let us.
I'm not seeing the question. Why do you ask me to take over the class?
Please let somebody
I
help
even
me.
understand it. I'm not with the question now.
Let somebody help me for your notes there, please.
My note is not complete because I was.
Now, what do you want to help? What do you want? Sir?
I want to know more about labor budget. I was not around then.
We're not writing it. So when he comes back or when he sends the slide, you see it.
I want us to discuss.
When you
it,
watch,
please.
you can watch the video.
For the labor budget, sir.
Yeah?
The units to be produced as at then was 2,100. Then it takes 4 hours. Yes, it takes 4 hours to produce 1 unit of product X. So 4 hours times 2,100 units, it gives you 8,400 hours.
I mean,
then 6 hours for 1 unit of product Y. It now gives you. Can you listen? Let me just tell you what I understand. I'm not saying I'm perfect, but let me just tell you what I understand and then what I wrote to my understanding. Sir?
Go on, please.
I can't hear you.
Product Y has 6 hours to produce in producing 1 unit. So that 1 unit, that 6 hours times the units to be produced of 4,200 units, it now gives you 25,200 hours, right? Then product Z,
you multiply it.
yes. Then product Z has 8 hours. Yes, sir. Product Z has 8 hours to produce 1 unit, and we have 3,100 units to produce. So if you times it, it will give you 24,800 hours.
Yes. Good.
Right?
I'm there with you. Thank you.
Okay, then you total the hours to get your total hours of 58,400. Then you now times it by the labor rate that is given to us of $3, sorry.
Yes.
So that $3 times 58,400 hours, it's going to give you a total labor rate of $175,200.
Thank you. Okay.
You're welcome. Thank you, sir.
Thank you.
Thank you. I appreciate.
Thank you, ma. You're welcome.
Thank you. The sugar tolerance.
No.
Mm. I told Sanusi to buy sugar that time. I don't know that.
There's no listing there. Sugar.
Okay.
Ena, ite mafu.
Hello, can you hear me, please?
Yes, we can hear you.
Wow,
Hey,
so
you are
sorry.
welcome back.
Welcome back.
Yes, thank you. I'm still trying to, I don't know. Yeah, so based on the question, let's just quickly talk about it. Mr. I think he's saying something about the closing stock for January. Yes, sir. Hello. So the question, the inventory of finished product at the end of each month is to be equal to 25% of the sales estimate for the next month. It means the closing stock for January will be what? The closing stock for January. So I don't think you have the question. I'm trying to go back to my laptop. I'm using my phone to communicate with you. So for those of you that have the question, those are some of the points we must look at in that question. That English there, how are we going to interpret it? It's very much important. The interpretation of that grammar. So, what is the interpretation of that? Sorry.
What is what?
The interpretation of that English, that the inventory of the finished product at the end of each month is to be equal to 25% of the sales of the sales estimate for the next month.
So it's 25% of the sales budget for the first month. That's 25% of 14,800 will be the closing inventory for January. That will now be the opening inventory for February.
Okay, fine. So, if January sales budget is 14,800, what will be the value?
It will be 3,700.
3,700. Okay.
Yes, sir.
And that 3,700 will be the closing for which month?
For January.
For January.
For December.
Okay, fine. For December,
That's
very
the
good.
opening for January.
Yes,
No,
be the opening.
January has its opening of 1,700.
Okay. So you have that to play with. You can't play with that. And those are the points you must do that. You must be able to analyze and interpret and interpret that statement very well. So the point is, the inventory as at the beginning of January should be 700. 3,700. How do you get that? 14,800 divided by 0.25. Now, inventory as at the ending will be what? Should be 4,200. Should be 4,200. So I'm just giving these highlights so that I don't want to see somebody failing it. That's why I'm giving these highlights. So you think in that direction. You think in that direction and see how you get and see how you get that. You think in that direction. Now, another point is the one we've talked about, that material equal to 1/2 of the next month's requirement are to be what? Are to be on hand at the end of each month. You must be able to interpret that statement too, because the question wants you to prepare what? Material purchase budget. Material to be purchased each month for the first quarter. So for you to know the material purchase budget, you must know what your production budget is. So your production budget for the first quarter will lead to what? The material usage and purchase budget for the first quarter. So this is what we are expected to do. This is what we're expected to do as far as this question is concerned. So you can do some brainstorming. In doing that brainstorming, you are helping yourself to be able to solve questions. So for now, we're going to stop here for this aspect of budgeting. So you can do well to solve this assignment. I'm very much concerned about you solving these assignments. So at least between now and Thursday, you can send your attempts to the platform. Send it to the platform so that we can evaluate. So on Saturday, we're going to take it further from this point and look at another question and try to solve another question on budgeting. We'll look at another angle of budgeting and solve question on it. Yes, any question, Mr. Moshood? I can see you raising up your hand. Yes, Mr. Moshood. A question?
Yes, sir. I don't have the question, but I can decode the 25%. $800 and 25% of 14,800. We get 3,700. Sir, so my question is, this 3,700, is it closing balance of closing stock of January?
The 3,700 is the closing stock as at December, coming as opening in January. Coming as opening in January. So you need to, in the question made it clear that on January 1st, there were 3,700. So that 3,700 was the closing in.
Okay. So, sir, sorry for my question. How are we going to get the closing stock for January? Are we going to do 25% of February?
Well,
Okay, thank you.
Product at the end of each month is to be equal to 25% of the sales estimate for the next month. So in January, what is the sales for for January?
Like,
Will be your closing for January. So I'm back to my laptop now. Let me show. Let's go back to show the question again. So inventory of finished product at the end of each month is to be equal to 25% of the sales estimate for the next month. So in January, what will be the closing inventory? 25% of the sales of what? Of February. Do the 25%, let's see. 16,800, 25% of it will give you what?
4,200.
Fine. So that is the closing for January. That closing for January will be the opening for where? For February.
February.
You'll be looking at to get that. So that is how you're going to solve it. Go and brainstorm. Yes, it's very important. So so Madam Anna, I can see your hand up. Any question?
Yes, sir. Sir,
What is the
please,
question?
I don't really understand this material equal to one half of the next month.
Material equal to 1/2 of the next month requirement is to be on hand at the end of each month. That is in terms of material usage. So in terms of material usage, the question says each unit of the product requires 2 types of material, isn't it? Material
Yes.
S requires 4 units, material Y requires 5 units.
5 units.
So based on your production budget in January, any result you have, you multiply that production value by what? By 4 for material X to get the value of material S. So it means half of the material should be at hand, will be the closing inventory. That material equal to 1/2 of the next month requirement. So next month's production required value for production should be at hand as at the end of this month. That is the interpretation. So you
Okay, sir.
can sit down and read it again and understand it very well.
Yes, sir.
So
Thank you, sir.
that is what you need for these exams. So sorry for the network issues and the rest. I'm going to call it a day at this point. I'll forward the slide to the platform so you can have access to the assignment likewise. So let's have a blessed
Thank you so much, sir.
Thanks.
Thank you so much, sir. Good night.
Night.
Thank you. Good night. Thank you, sir.